The current situation is unprecedented for holders of Ethereum and XRP. One of the most significant liquidity shifts of the decade may be about to unfold as a result of current trends in the cryptocurrency market. At the moment, everyone is talking about Ethereum. According to past events, the remainder of the cryptocurrency market, particularly XRP, not only follows suit but also experiences an explosive price increase. You're about to discover the vital nature of this moment and how today's events with Ethereum could trigger the largest XRP rally to date. Avoid taking this as financial advice. There is a flood of capital going into Ethereum at the moment. What follows is obvious to anyone who has spent any amount of time in this market. Institutions and whales alike will ride the ETH wave to their desired destination. They will then invest that money in the next major player. The altcoin space will be utterly chaotic after that. All indications point to the fact that we are getting dangerously close to that critical mass, which is why I'm sharing this video with you today. I must present something monumental to you before we delve into the details of what Tom Lee has said regarding the future of Ethereum and why it is relevant to the next move of XRP. The definitive approach to become a billionaire investor and locating 100x stocks is available in the pinned comment. Find the kind of investments that can change everything for you with this full-featured resource that includes documents, photographs, videos, and step-by-step insights. You would have to be insane to pass up anything of this quality. In addition, if you use my Moomoo link and invest $100, you will receive free NVDA stocks worth up to $1,000. Getting into position while you can is a play that anyone can see through. Let us return to Ethereum now. Ethereum surpassed the $4,000 mark only last week. It is now hovering around $4,200 at the time of this recording. The $4,000 price objective that Tom Lee had anticipated earlier this year was utterly destroyed by that. Even while ETH's run has been phenomenal, XRP has been subtly easing off, taking a step back to prepare for its own next surge. Nobody should be worried about this. Just what the market needs before momentum increases again, a classic healthy correction. Here, Tom Lee's viewpoint is intriguing. In the short run, ETH's price isn't always determined by its fair worth, he said. Traders are aiming for liquidation levels, engaging in pair trades, and placing short-term wagers against ETH, all of which contribute to the increased volatility. However, the most important thing to remember is as follows. With Wall Street's full support, Ethereum ETH, according to Lee, is currently experiencing its Bitcoin 2017 moment. What does that have to do with XRP? Why? Because back in December, we witnessed the same identical setting. The next wave of liquidity will likely go into other top-tier altcoins if Ethereum reaches a critical high and institutional investors begin to cash out. At the head of that line is XRP. The prospect of a capital tsunami smashing into XRP is quite real if Ethereum reaches its peak, which is expected to happen within the next 30 days. Nobody is speculating on this pattern. Nothing new has transpired. When it does occur, it does so very quickly. Liquidity doesn't flow down as the tide changes. It erupts. The current setup is frighteningly similar to what we witnessed in earlier cycles. The price behavior of ETFs, however, is just the beginning. Staking and treasury management are extremely important to Ethereum's environment, according to Tom Lee. He drew parallels between the Bitcoin strategy employed by MicroStrategy and the accumulation rates of ETFs. MicroStrategy managed to seize 3.2% of the total Bitcoin supply in a few 5 years. Just picture Bitmine or a similar firm doing the same thing for Ethereum, but 12 times faster. It's happening precisely like that. Plus, Wall Street is ecstatic because it's taking place within a completely compliant structure. Why? For the simple reason that Wall Street prefers to deal with Ethereum in a transparent, legally sound manner that complies with U.S. legislation. Ethereum is more than just another cryptocurrency, as Lee pointed out. It has all the makings of the leading blockchain for tokenizing monetary and stock market assets in the real world. It's for this reason that the institutions are flocking. But now we reach the turning point. Although it isn't the best, Ethereum's technology is good. In terms of efficiency, it falls short. You won't get the quickest or cheapest transaction rates on this platform. Extremely cheap fees, near-instant settlement times, and unparalleled efficiency are all features of technologies like the XRP ledger. These are essential for widespread use. They play a key role. The bright light on Wall Street right now is Ethereum. They're flooding in since it's a trusted name in the cryptocurrency industry and everyone knows it. However, market conditions change over time. Investors start looking for superior technology once the initial excitement fades and true performance indicators are compared. Institutions will inevitably move on to XRP as a result of its scalability, low transaction costs, and faster transaction speed. And the worst part is this. Just one thing happening could speed up this reallocation: the approval process for XRP spot ETFs. If these ETFs are indeed set to begin in September, retail investors may be the first to buy, leading to a demand spike that institutions simply cannot ignore. At that point, things start to snowball. The cycle multiplies itself as liquidity compounds and price activity explodes. Although it will continue to play an important role, Ethereum is not the final blockchain. It is now serving as a staging site. A global financial system can be supported in real time by the assets that the smart money will be eyeing, even as Wall Street sets up shop there. Digital assets such as XRP. The current events are not coincidental. Once again, we see the same commercial mentality at work. When a liquid reaches its top, it begins to rotate. This time around, XRP won't only reap spillover benefits when that rotation occurs, it's perfect for being the focal point. Additionally, Lee stressed that ETH Treasury enterprises are essential infrastructure, not only investments in a passive manner. These entities provide essential assistance to the network and also earn staking yields. However, this is irrelevant when considering that XRP's ledger is more optimal for specific types of low-cost, high-volume worldwide transactions than Ethereum's ETH is. Institutions will want exposure today, not in a few years when they start doing the math. That is why the following 30 days will be critical. The rotation point is approaching with each passing day as ETH prices rise. It may cause a capital flight that is both unprecedented and unprecedentedly violent in the history of cryptocurrency when it happens. The main point is this, but I could go on and on about Tom Lee's observations. The current dominance of ETH is preparing the stage for XRP's launchpad. Everything is setting up for a repeat performance of something we've seen before. However, this time around, everything is on a grander scale, with more participants and significantly higher stakes. For those that own XRP, the action begins now. Institutions aren't haphazardly buying ETH like a sack of potatoes, despite how accurately Tom Lee describes Ethereum as the Wall Street-friendly compliant blockchain right now. The same firms that rebalanced aggressively following Bitcoin's previous significant runs will do the same here. They will quickly shift their focus to the next top-tier asset with the most asymmetric upside once they have maximized their gains from Ethereum. At that point, XRP will be the center of attention. Give that some thought. Capital from sovereign wealth funds, hedge funds, and Wall Street is pouring in. These players aren't slacking off. Entire markets are influenced by their hits. In addition, the XRP ledger's efficiency, when coupled with that type of money, creates an ideal environment for price explosions. Tom Lee was very correct in reminding us that we saw indications of this in December. As liquidity spilled over, XRP soared to new heights while ETH topped and cooled. This time the engine is revved up to full speed. A larger pool of willing crypto investors, easier access to exchange-traded funds, infrastructure that complies with regulations, and increased public awareness of the market. Also, this whole thing might be set in motion by the establishment of an XRP spot ETF. Investors won't be waiting for news to arrive before putting money into their brokerage accounts once they see that ticker. They're going to go right to work. The volume will be perceived by institutions as an indication of rising demand, prompting them to expedite their entry. An avalanche is formed when a snowball grows into that. It will be challenging for Ethereum, ETH, to maintain its outperformance once capital begins searching for the most efficient settlement layer on the planet. However, staking returns and tokenization plays will still be available. In that regard, XRP excels. Since the technology can resolve what other chains take minutes or hours to settle, there's no need to convince people of its merit. The activities of the Ethereum treasury go beyond the simple storage of currency, as Tom Lee recently noted. They're constructing systems to handle money. Yeah, I get it. One major benefit of XRP is that it was designed specifically for international, low-cost, high-speed transactions. In its design, the ledger isn't aiming to be perfect. Its sole focus is on achieving the most efficient transfer of value. That kind of specialization is what succeeds in the global payments business, which is worth several $1 trillion. Capital markets are insatiably seeking yield, which gives XRP an additional advantage. Staking ETH now might result in favorable yields, but as more ETH is staked, those yields could compress. At the same time, XRP has institutional use cases that ETH can't imitate due to Layer 2 complexity. They include cross-border settlements and liquidity provisioning, both of which can produce yield-like revenue streams. Imagine a scenario where XRP ETFs are introduced alongside more institutional support and Ethereum's price growth decelerates. That setup is ideal for rotation. The largest funds and market makers are probably already plotting it out. Let me tell you the truth, these transitions are rapid. Most investors often miss out on the bulk of a rotation's benefits because they don't see it coming. It is crucial to prepare now for this reason. While we're on the subject of being ready, make sure to download the Ultimate Millionaire Investor Guide, 100 times stocks, from the pinned comment, if you haven't already. Discover potentially life-changing investment opportunities with this comprehensive bundle that includes documents, photographs, and videos. This is not filler. You will be provided with practical tools that you may put to use immediately. Be sure to use my Moomoo link to secure up to $1,000 worth of free NVDA stocks when you deposit $100. Simply by situating yourself, you are rewarded with free equity in one of the most popular corporations in the industry. The market setup is now our focus. The rapidity with which public opinion can change is another important consideration. Transferring funds from one big asset to another used to take months in the past cycles. The modern hyper-connected market allows for this movement to occur in a matter of hours rather than days, thanks to features like on-chain analytics, social sentiment tracking, and round-the-clock worldwide trading. This is the reason why XRP holders find the words, "a switch will be flipped," to be very meaningful. There will be no gradual change in tone when the storyline pivots. The action will quickly shift, and those who act swiftly will reap the most rewards. The impending race for supremacy on compliant blockchains is something that Tom Lee may not have explicitly stated but is implied in all of his statements. Although Ethereum has a head start, it can yet be overtaken by competitors. According to market history, XRP's foundational elements are precisely what the industry needs to take the next step forward, and this is true across industries, not only in technology but also in banking. Once ETHFs run slows, Ripple's liquidity corridors, connectivity with financial institutions, and scalable ledger are all set to take advantage of that influx of capital. Ethereum reaches its maximum. XRP experiences a deluge of liquidity. Exchange-traded funds allow widespread public participation, and institutional demand is locked in for the foreseeable future. No, that is not a made-up situation. The speed and openness of cryptocurrency have magnified a cycle that has already been observed in various forms across many marketplaces. Bottom line, as ETH continues to rise in value, the window of opportunity to position before this rotation begins is becoming increasingly smaller. With every percentage point that ETH gains, the pivot becomes closer, and XRP will probably be among the top gainers when that change occurs. The change will happen without warning as soon as it starts.